pointed out by some of the seniors out here that there's a lot of improvements which need to be made. Okay, the service operates very well. It's been, in terms of efficiency, I think it's one of the most efficient services, given the volumes of goods and passengers who are transported, and I would say in a very, very smooth manner. We haven't heard of any problems as such in the operations of the railways in terms of any kind of controversies about the railways. We could be having it in coal, we could be having it in telecom, but never the railways. So it's one of the cleaner organizations, the wings or the arms of the government's operations. But where really is the problem? Because we're really talking in terms of improving the structures, improving the services. We really want to make sure that is it possible, like comparable to China, can I move from Bombay to, say, Ahmedabad or Bombay to Delhi in a faster manner? So this is the whole concept of bullet trains which has really caught on. Similarly, is it possible for me to have more services? So therefore I need to have more railway lines. So therefore there is this whole question of saying that how do I really create these kind of lines? If I'm talking in terms of having more carriages, where do these carriages come from? Somebody is supposed to finance them. If I'm talking of the signaling systems, the security systems which have to be installed, all these things are required, they are being done by the railways, but can we do it in a faster manner? Can we do it in a more all-encompassing manner? So it is against this context that this whole idea of bringing FDI into railways has really germinated, which the recent government's budget really talks in terms of allowing 100% FDI in railway infrastructure. They made it very clear the railway operations are not going to be subject to FDI or any kind of private intervention. So the organization is going to carry on as it has been doing. It's just that all the supplies of the products which are being used by the railways would be supplemented with foreign direct investment. So clearly kind of a misnomer, because I've been reading in the newspapers that a number of unions are worried about whether there will be job losses. It's quite clear that none of the jobs are really going to be affected. In fact, this would be creating more jobs, because the moment I get FDI coming into it, either directly or taking up 26%, 50%, depending upon the choice of the investor, I'll actually be creating new capacity. There'll be new production. And on the whole, we have seen that whenever FDI comes into a particular segment, it forges very strong linkages, backward linkages with the rest of industry. So if I just think of a new railway line being constructed, if I have more railway lines because there's more money which is coming in, what does it really mean? There's going to be a greater demand for cement, there's going to be a greater demand for steel, there's going to be a greater demand for machinery, so on and so forth, which really means that overall industrial growth is going to be fostered on account of more investment coming. Growth, of course, is neutral. It doesn't really, it's agnostic to whether it's private investment or whether it's FDI. But given the fact that the private sector is not able to provide the kind of funds which are required, we've had this whole concept of PPP being spoken of, but they haven't really been too successful again in the infrastructure space. Roads is probably the only area where it's worked relatively better, but if we're talking of other segments, it hasn't really taken off. So here we're talking of a situation of FDI and retail coming in, and this particular funds forging these strong backward linkages so that there is overall growth taking place. Now, it's all well said for us to say that FDI in railways is going to be 100% permitted, so there are going to be lots of funds coming in. We could be having different kind of numbers saying that instead of 30 to 40 billion dollars, will there be 40 or 50, 60 billion dollars coming in, an additional 10 or 20 billion into railways. Now here I think we need to be a bit careful, because whenever we have had sectors opened up, I think a potential investor is also going to gauge and find out whether it really makes sense to invest in India, because today, as I mentioned earlier, we have a situation where foreign funds tend to move to non-infrastructure sectors. So today, if we're talking of them coming into railways, I think again, something which was mentioned earlier, what are the kind of gestation lags which are required? Now, for example, let's say that 17 sectors have been opened up, I think, in the new dispensation for FDI and railway infrastructure. They're talking of 90,000 crores of a potential number which could be coming in. Now, if I'm talking of 90,000 crores being invested in all these projects, as an investor, what are going to be my returns? When are these returns going to come? Have I to wait for 10 years, 15 years, 20 years to make returns? What kind of packages are going to be actually structured by the railways? Are there going to be any kind of purchase orders being placed in advance? If I create this bullet train, is the railways going to tell me that X% of the ticket funding or the ticket fare is going to come to me in terms of a return? These are all imponderables. We really don't know how it's going to work out, but it's really going to be sufficiently attractive for these kind of large investments. And besides, with my land, environment, and other kind of regulatory issues which are there, when I have the kind of confidence saying that, okay, I won't get into roads because it created a problem for me, but let me get into railways because it's very exciting, because bullet trains is a very good idea. I'm not quite sure if it's going to work out that smoothly. So we shouldn't be over enthusiastic about this whole concept saying that there's going to be a revolution taking place in terms of infrastructure creation in the railway segment, because things would move fairly slowly to my mind, because one will have to assess which are the areas, which are the low-hanging fruits, which are the ones which are going to be easier for FDI to really come in, and what are going to be the kind of returns. In fact, even today, if you look at roads, a lot of these tolling systems which have come through, most of the creators of these roads say that we're not yet breaking even. And we've already crossed maybe 10 years in a city like Mumbai, and we say that we haven't yet covered our costs because we're not able to generate enough revenue. Similarly, if we're talking of the airports, we have a T3 here, we have a similar thing which has come up in Mumbai. Very grand hotels, what are the kind of returns which they're getting, and can they really wait for that period of time before they get the returns? One is not sure about it. So the way we should be looking at FDI in railways, to my mind, is that let's keep an open mind. If funds do come in, it will definitely be beneficial. I don't see any immediate danger as such, or any immediate harm in terms of jobs being affected or anybody's business being affected. Even the guys who are actually supplying the material right now, who are supplying this kind of infrastructure for railways, would probably face competition at some point of time, but given the kind of demand-supply gap today, I think there would be enough room for all these players to operate. And, well, that being said, let's not really think that there's going to be a huge flurry of funds and there are going to be lots of applications coming in, because even when we had things like retail, which was opened up to 51%, we just had one application which came, which has been withdrawn after we've gone back on the FDI in retail. So, to my mind, it's a very good move which is being made by the government, which hopefully will materialize and translate into a certain amount of flow of funds, but not in a very dramatic way as such to say that in the next 5 years of tenure of the government, we're going to see things happening differently in terms of investment. Now, this said, if it's possible, could we run the presentation? This is just to, it'll probably cover most of what I've said, but will give you certain kind of concrete numbers which we've been talking about. Okay, these are some of the trends which I spoke of about how much of FDI has been coming into the country in the last 10 years. As you've seen, it's in the region of around $30 to $40 billion. Now, this is notwithstanding the fact that India is considered to be a tough country to do business in. Now, the latest World Bank, they keep bringing out these indicators about doing business. India, I think, ranks 140, 142 or so in the list of 189 countries. So India is not an easy country to do business, but notwithstanding this very low rank, we're still getting around $30 to $40 billion, which is a reflection of the kind of potential, the kind of excess capacity which is there in the country, which could be leveraged by such kind of investors. Now, this gives you an idea about what are the kind of limits which have been set for different sectors. So we have 100% in some of them. We have 74, 49, 26%. If it's readable, but I mean, we don't have to get into the details out here, but okay, there are different limits set. For the railways, it's 100% in railway infrastructure. Okay, this is an important slide which actually tells you about where exactly it's going. So as you see, services, essentially financial services, 17.7%, construction is around 10.4%. This is historical, right up to from the time when we started, early 90s till 2014. So if you just sum up things like construction, power, telecom. So telecom is also high. So we have 10, 17, 21. So it's around 20, 22% is the total share of infrastructure in overall foreign direct investment. See, telecom has been one sector which has really done well. I think if you look at almost all the telecom companies in the country, all of them have FDI. I think Reliance is the only exception, which is 100% Indian run. But the Vodafone case which came up, the case of retrospective taxation, has been a major blow because a lot of foreign investors are feeling that should we be coming and investing in India because I make an investment today, I make an acquisition today, and maybe after 10 years somebody says that this is not right and you'll have to pay some kind of tax on it. That was the whole issue of Vodafone purchasing Hutch. So there's a bit of apprehension, especially when it comes to sectors like telecom. But again, if you see $229 billion is cumulative over all these years, and I'm talking of China getting $506 billion on an annual basis. So clearly China has gone much beyond, much faster than what we have. Now here's to give an idea about who are the kind of players which we're talking of. We're talking of Chrysler, General Motors, Ford, McDonald. These are all in the consumer goods area. Amazon, Amway. Then in the non-consumer goods, Vaishya Bank recently bought up by Kotak Bank, but that was also a case of an FDI coming in. And we have it in the airlines, we have it in insurance, but these are all 26% in insurance. IT, of course, Oracle, Microsoft, IBM, Airtel, Tata Docomo. That combo also has FDI. And here we're distinguishing it from FII flows, which are relatively more volatile, because when the FIIs are coming in, it depends upon a different category of funds which are being invested. So even though we normally assume that around $30 billion will come in through FIIs, it's based on what are the conditions in the country, what are the opportunities in other emerging markets. So for FII funds, we normally tend to compete with countries like Indonesia, Malaysia, Brazil, Mexico, Turkey. These are the nations which would also be claiming funds from the point of view of the institutional investors who are basically trading in equity and debt. So this has nothing to do with people who want to run a company. Okay, now coming more specifically to railways, which are the areas? These are the 17 areas which I mentioned: suburban corridors, high-speed trains, dedicated freight corridors, rolling stock trains and coaches, electrification, signaling systems, freight and passenger terminals, industrial parks and railway sidings, mass rapid transport systems, testing laboratories and facilities, standalone passenger corridors, so on and so forth. So overall, we're talking in terms of an initial investment of around 90,000 crore rupees. So it's almost 1 lakh crores. So out of the 12 lakh crores which we have spoken of on an annual basis, we're talking of 1 lakh crores, 1/12 of it coming from just this FDI in railways. And these are the things which have been specified in the immediate plan of 90,000 crores will include 1 suburban corridor, 2 high-speed trains, 11 freight lines, certain stocks of EMUs and coaches. This has been given in monetary terms, 200 kilometers of electrification, 370 kilometers of signaling, 13 passenger terminals, 6 training institutions, and mechanized laundry. So this all comes to around 90,000 crores. Now, why do we require it? The same demand-supply issue which we're talking of. The cost of developing railway infrastructure is very high. We're talking of the cost of Ahmedabad-Mumbai high-speed train network could be between 60 to 70,000 crores. This is a huge sum, and in fact, I was just discussing with Sanjeev before that we're talking of a line of Mumbai and Ahmedabad. One is not quite sure what would be the kind of traffic on it. Because I stay in Mumbai, lots of interaction with Gujaratis, that's the crowd which moves. They normally like railways to be an experience. So even though we have a number of flights going to Ahmedabad, they prefer to go by trains. They prefer to board the train at 10 o'clock along with the entire family, have their dinner on train so that they reach Vadodara or Ahmedabad by 5 o'clock or 6 o'clock. So this being the case, personally, right now, prima facie, I feel I'm not quite sure about what kind of traffic will be going into for these kind of bullet trains. Railways, of course, have a cash issue for financing of these projects. It's a lacuna in technology for keeping pace with the objectives enumerated by the budget. And more importantly here, this is an interesting figure, I think an operating ratio of 94%, which means that within the finances, or the railway finances, it may not be possible to make these kind of provisions in the immediate future. It will have to be spread over time in case the railways have to do it on their own. Now, there were some targets which were set. These are just terminal points set by the 12th five-year plan in terms of the railways. Now, they expect from 8,139 million passengers to go to 11,710 million passengers. The amount of freight, new lines, gauge conversion, and this is the kind of funding which they have spoke of. So this is much lower than what we are talking of 90,000 crores coming from FDI, but the budget is, but the planning, the document really talks of 1.9 lakh crores to 4.2 lakh crores. This is just for a single year. So these are the kind of numbers. But of course, take it with a pinch of salt, because whenever these estimates are made, this is supposed to be the ideal situation. It's not that this is going to be the actual number flowing in, but even with 50% coming in, we're talking of something like 2 lakh crores instead of 4.19 lakh crores in the terminal year of 2017. Now, what are the goodies which come in when we have FDI? It provides resources and technology required for modern railways networks. So we have this 90,000 crores which we're talking of. It hastens up the speed of creation of such facilities and networks.